and welcome to this first video on the topic of income from house property. In this video, our objectives are to look at what exactly is a house property and who owns a house property. Okay, so let's start by trying to define house. The meaning of word house is not the same as dictionary meaning of the word house. House, for the purpose of text, could be any premises with walls and roof over it. So it is not necessary that it's a premises where somebody lives. It could be a commercial premises, it could be an industrial premises, it could be shop, go down, it could be anything. Usage of the premises does not matter at all. What matters is there a premises with walls and roof over it? If yes, then it can be called a house for tax purposes. This premises is very important. Plain land is not house. Plain land is not house. Now this brings us to a question. What if you have a premises with plain land and some building on it? Let's take an example where a land is attached. For example, there is a bungalow with a open garage attached or a garden attached. Now what is it? Is it a house? We got to ask ourselves a question. What is the basic purpose of the premises? You intend to hire the bungalow and the bungalow comes with some land attached. It's not that you are hiring land and the land also comes with some buildings attached to it. Right? So basic intention is to hire the bungalow and not the land, and hence it will be treated as a house property. So recapping this thing, any residential, commercial, industrial premises, any kind of premises with walls over it, walls around it and roof over it can be considered to be house. Okay, now having defined what is a house, let's understand what is income from house property. And while doing this, we will also understand that who can get income from house property. Obviously, owner of the house property can get income from house property. So, what is income from house property? The rental income is considered as income from house property. We are not discussing about income generated by buying and selling of houses which you own. If I bought a house for 10 lakh rupees and I sold a house for 20 lakh rupees, the profit which I made would be considered as capital gain, not income from house property. When we refer to income from house property, we are largely talking about rental income. Now this rental income might have been actually earned by you or could have possibly been earned by you. Now what does this mean? It means that it is possible that you actually haven't received any rental income, but it could have been possibly earned by you had you given out your vacant house property on rent. Let's zoom in on this factor a little bit. Let us say you have a house which is lying vacant, which is neither being used for residential purpose nor for business purpose. Now, if you have any such house, the income tax department will treat it to be deemed to be let out. Let me give you an example. Let us say you have a house which is owned by you and which you claim is lying vacant, is being put to absolutely no use. And just very nearby to this place, you are staying in another house which is actually rented by you. So the income tax people will say that you have a house which you are not occupying, which is lying vacant, which is not being used for any purpose, and hence we are going to treat it to be deemed to be let out. We don't kind of believe that it is not being put for any purpose and then you are staying somewhere nearby on rent. However, there is an exception. Let us say if you have a house in one city and you are staying in another city, you are staying very far away from that house due to your business or your work is quite far away or for some similar reason, and it is not possible for you to occupy this house, then this provision does not apply. Right? So it only applies in case when there is seemingly no reason for you not to occupy the only house which you have. The another part is when you have more than one house. Now, as per income tax rules, everybody is allowed to have one self-occupied property only. I can't have two self-occupied property. Now what does that mean? I can definitely buy as many houses that I want, but I can treat only one of them as self-occupied property. I can decide which one I want to be calling as self-occupied property. The income tax is not going to interfere in my decision. But I'll have to decide if I have two properties, one of them will be treated as a self-occupied property, the other has to be considered as deemed to be let out. Right? So either I have a house which is lying vacant or I have multiple houses. Then I would be considered as somebody who has a property which is deemed to be let out or could have possibly been rented out. So here we are in the situation, rental income which is actually earned or could have possibly been earned by letting out properties which you did not let out. So by letting out a house which is either owned by you or deemed to be owned by you. Now we have spoken about deemed to be let out. Now what exactly do we mean by deemed to be owned by you? You own a house or you don't own a house. Now what exactly do we mean to say that you can be a deemed owner? Well, there are certain instances where even if you are not owner, for all practical purposes we will consider you to be the owner. Let's look at what these circumstances are. Now who is a deemed owner? First, something which is very common, a member of cooperative society. Now if you are staying in a cooperative society, technically the property is belonging to the society. You are a member of the society and hence you are allowed to occupy a place. For all practical reasons though, it is your own place, you own the place and hence you are considered as deemed owner of the property. Now another is long-term lease, a property under long-term lease. Now there is a distinction to be made here. Income from house property cannot be got by subletting. For example, I have a property which I let out to somebody for 10,000 rupees per month. Now that somebody further lets it out to somebody else at 12,000 rupees per month. So my income is income from house property. The person who has let out the property from me, their income is not income from house property because they don't own the property. Right? So you need to be owner or the deemed owner so that you can get income from house property. The situation would however change if the lease agreement between me and my tenant is 12 years or more, which is a long-term lease agreement. So the moment I have a 12 years lease agreement, my tenant will then be considered to be deemed owner of the property, and hence if he further sublets it to somebody else, his income can be considered as income from house property. Now next, this is something which is very important. Transfer of property to spouse or minor child without adequate consideration. Let me repeat that last three words, without adequate consideration. Now what could this mean? Let's say two examples. Example 1, you have transferred a property to spouse. Now it could be husband to wife or wife to husband. There is no seeming adequate consideration for it. Now while Contract Act does allow love and affection to be treated as consideration, but from tax perspective, when you transfer a property to spouse, you can do that because Contract Act says love and affection is a valid consideration. However, from tax perspective, you will be considered as a deemed owner of the property. You directly don't own the property, but you will be considered as deemed owner of the property. So when you are the deemed owner, if the property is being put up for rental purposes, any rent which is being got through that property also becomes your income. Another example, this is a situation where you did not have any property, you have actually transferred money to your spouse, and your spouse bought property with that money. So you transferred, let's say, rupees 25 lakh to your spouse, and your spouse bought a property worth 25 lakh with that money. Now, such a property will considered to be your spouse's property. It will not be deemed to be your property, right? However, if this property is put on rent, this rent will be deemed to be your income. Remember what was happening in example 1, the property was also deemed to be your property, and the rental income then obviously becomes your income. In the second example, where you have transferred the money, the property will remain spouse's property. You will not be the deemed owner of the property, you will only be the deemed owner of income generated from that property. And lastly, a person who has acquired property under power of attorney transaction. So these are people who are deemed owners. So at a glance, what is income from house property? Rental income actually earned or could have possibly been earned by letting out a house which is owned by you or deemed to be owned by you. Well, that's all for this video. In the next video, we'll talk about annual income.